Hey there. You're in the right place. We're getting started right now. Oh yeah, we're going to do this. How you doing? I'm Mitch. If we haven't met yet, you're watching my live stream, Be the Boss of Your Money. It's your post-market show where we talk about investing, personal finance, the economy, all the things that you need to know to become the boss of your money. And what that simply means is I want you to become better with your money and potentially help you have a more successful life. It's important, right? So let's take a look at a couple of things today, all right? First, what we're going to do is we're going to roll the intro. I want to just tell you that we're going to talk about the plunge in oil and a whole bunch of things to take a look at. So let's get the intro going. And while you're watching, if you have any questions, hit me up in the comments, words of wisdom, words of encouragement in the comments, or just say hi. That's always appreciated. Give us a thumbs up or a heart or whatever, reaction is available to you depending on what platform you're watching this. If you are watching this in the replay, hit me up with your questions. I will see that. I will get the alerts, and I look forward to getting back to you as well. So let's roll the intro. We've got a couple of big things to talk about, and it's going to be, I think, a lot of fun. Here we go. All right, good to have you back with me. It's good to be back with you. I get really thirsty before I do the show. I should drink more during the day. Keep one of those big hydration bottles. So we're talking about the market. It was a solid update today. It went up for a couple of good reasons. Look, just because the market's up, well, it's always a good reason. I don't like to be in this position where I'm saying it's always a good reason when the market goes up, and it's never a good times. We think we know why the market went up or down, and then we look back with the benefit of hindsight and say, now I know what happened. So if you recall, I talk about this a lot, but the day after Thanksgiving of 2021, the Dow dropped about 1,000 points. And that was right after the Federal Reserve finally cemented their position that they are changing their easy money policy. And, the Fed was buying bonds, over $100 billion worth of bonds every month. That is officially ended. The bond buying program ended about a week ago. So the Fed is no longer buying Treasury securities and mortgage bonds. The world did not end. And now the Fed wants to get off of its position of zero interest rates. So, Fed is expected to announce that it is raising its benchmark federal funds rate, which is now pegged between 0 and 0.25%. Fed's going to raise it to 2.5% at a minimum, 0.25%, and it could drift upwards of, 0.5%. But generally speaking, when the Fed announces a target rate, let's say a quarter point, it's a target rate. Like the Fed's going to go from 0 to 0.25%. The 0.25 is a target rate. That rate could gyrate depending on gyrations in the global economy, the bond market, and then the Fed could act to reinforce that rate. So, you just should know that it's not always an exact number. So there were some good reasons, and we saw the right stocks go up today mostly. But overall, it was a good day, up 600 points. We've seen lots of All right. I don't know what happened there, folks. I'm really sorry about that. I hope you were able to stick with me this whole time. These are the vagaries of going live, by the way, with an internet connection. It happens even when you watch, cable news shows, CNBC, CNN, Fox. I have to say CNN and Fox. Make sure I include everybody, just so no one goes, "Oh, what are you trying to say?" Um, so I wanted to make sure I include everybody. So, but you see those cable news networks where people are interviewed on Zoom connection or some other video conferencing connection. People get dropped. The connection drops. I see it happen at least once or twice a day, every single day. And then the anchor person says, "Okay, we're going to try to get so-and-so back. We're having a little technical difficulty." And then they come back and you get on with the show. All right. So hopefully that wasn't. All right. I don't know what's going on with my internet connection, but it seems to be happening a lot. So let's get back to this. So let's just take a quick look at some of the things that are happening. The economy is expected to slow down. These are the negatives, right? Fed's going to start tightening policy after a lengthy period of zero interest rates. So rates will go a little bit higher. But you don't see that, okay, on regular TV, right? By the way, Sylvia is out there. VUR dot FYI. I don't know. Check your Wi-Fi. I don't know what you're trying to tell me, Sylvia, but I appreciate you telling me. I'm actually not on a Wi-Fi connection, just so everyone knows. I'm on a landline. I'm hardwired right into the router. Oil up, gasoline prices up, inflation everywhere, and supply disruptions, which we never seem to get out of supply disruptions. And then, we have the war between Ukraine and Russia, which creates more supply disruptions. And China has this zero COVID policy, which is ridiculous. But when China gets a case of COVID, they just shut down entire ports and entire cities at once. Like if people think that the United States and Europe were tough with COVID lockdowns, they are way, way tougher in China. But Shenzhen is a big city important to the technology industry of the world. That city is basically in lockdown mode, and that really kills it for supply chain issues. So we're not getting any relief. Having said that, the market was up today. Was it was it an oversold bounce? Did the market deserve to go higher? Well, I think the first thing we need to do is we need to put you on with a chart of the day. I should do that every day, the chart of the day. So let's see. Hopefully this will work. Pop myself up in the corner. Okay, chart of the day. This is the 5-day. I'm sorry. This is the 1 month or 1 month chart of oil. So just West Texas Intermediate. That's how we measure our crude. It's down even more. It was down about $5-6 a barrel. Now it's down $8 a barrel, down 8%. Now it says 94 over here. All right, you see that this was 130. It hit 130 a couple of times last week, and it never got through it. And just when everybody said that's it, oil's going to 150, $200 a barrel, maybe the energy minister of Russia said you could see oil go to $300 a barrel because you're going to ban energy imports. Well, it turns out that there is there's a big worry about energy use globally. There's a worry that the global economy could slow down because of COVID infections in China, and not to mention the war in Ukraine. Talking to people about this war in Ukraine, I mean, It is, I guess I shouldn't say surprising, but it is notable how many people are depressed by what's happened in Ukraine, because this is the first real big war that we've seen on social media, and it's people are just heartbroken over it. So anyway, worries about the global economy slowing down and reducing oil usage. So oil is about $95 a barrel, down from 130. So this is the chart of the day. Right here, all right, is just when Russia invaded Ukraine, and oil touched all the way up here. See that? All the way up there, 129. It did intraday hit 130, and they came all the way back down. Now, no one can tell where oil is going to go tomorrow. I'm not making any prediction about the price of oil, because I don't think it's something that serves my audience well. It doesn't serve you well. It doesn't serve me well. So let's just take a look at what happened, though. Uh, we saw the same. We saw a very similar chart with the price of lumber and other commodities over the last year, and now that oil is coming down, you're going to start to see the price of gasoline go down, albeit from high levels. But that could make consumers feel a little bit better, give people a bit of a relief. And, this could help with consumer spending. If people are putting more money in their gas tank, it means they're spending less money in other places. Now, we all hear about how the consumer is flush with cash and in great shape. Um, yeah, true. But also, we had a lot of fiscal policies that put money into consumers' hands. Those policies are over, and consumers eventually go through their money. So, but unemployment is low, so that still is a very good positive, very strong positive for the economy. So we'll see. I can give you. I think it behooves any investor to look at the pluses and minuses of every situation. This way, you don't get mentally overly bullish and get carried away into a particular investment or strategy, and you don't get overly bearish, meaning overly negative, and sell everything or not staying invested, or when there's a panic in the market or a down day, a down week, or a down month, you hear some bad news and you just get out of the market thinking you'll get back in at a better time, because you won't get back in at a better time. You'll get back in at a much later time, when stocks are probably much higher, because that's when you're going to feel that it's safe to get back into the market. And it's just an endless cycle of procrastination when people do that. All right, so that was the chart of the day. Oil has gone up and gone down. You'll see gas prices go down, and that means that maybe the oil shock that we've been witnessing for the last month or so will not drive the U.S. economy into a recession, because that was a worry that an oil shock would cause a recession. It's happened in the past, so we can't say it's something that we haven't seen. It's definitely something that's in the realm of possibilities. Let's take a look at the overall picture, the big picture. Okay. Dow up 600 points, up almost 2%. Nasdaq up almost 3%. S&P up over 2%. Gold is down. Safe haven status. Just so you know, safe haven investments like gold and treasuries, when they do go up because of a panic or over a financial or geopolitical event, typically the run up is short lived, and these investments lose their value, and they go back down to where they were before the big bad event happened. Oil, as we discussed, down to a little under 95, down $8 today. The 10-year treasury up a drop, 2.14%. The VIX 29, so it's under 30. That's a good thing, but we really need to see the VIX get back down to 20 to feel like we have an all clear sign in the stock market. Okay. So that is one thing. Let's take a quick look. Let's take a gander at what worked today. These are the exchange traded funds that follow the 11 major sectors of the stock market. So XLK was up 3.3%, but it's still way the heck down from its high. Consumer XLY is consumer discretionary. Okay, so it was up $5, but still down from 215. Its low is 161. That is it's really stunning to see how much a lot of these a lot of these investments have come down. Staples was up today. Healthcare was up today. Communications, industrials, financials. If you saw industrials, XLI and XLF, which is financials, if you saw those leading the market, like out front, the best performing sectors of the day, I feel a little bit more bullish about things because they're more economically sensitive. But when the market's led by healthcare and consumer staples like XLP and XLV, those are not necessarily up because people believe the economy is stronger. Those are up because investors could believe that the economy could be weaker than we thought, or could be getting weaker in the future faster than we thought. Okay. Um, let's see. At the bottom, of course, is energy, which was all the rage, and you you couldn't buy energy stocks fast enough. And if you recall, on Monday and late last week, I said, "Hey, you know what? Actually, last week, and I reiterated yesterday as well. Take some profits on some of these big winners in the energy space, only because when you see a sector go parabolic and the sector just goes straight up on the chart like a hockey stick, that is, to me, it's not a promise or a given that you have to sell, but you could sell a little bit, reduce the size of the position a little bit, take some profits, and either sit in cash or use those funds to bulk up on another area of your portfolio that is maybe underrepresented. And one of the things we spoke about was emerging markets. And again, before I catch some flack for that, don't at me, okay? But emerging markets is a space that is so hated and I think so underowned after over a decade of underperformance. And everything that we saw happen with Russia, people just don't want emerging markets. But I think that's an important place to be. You could go emerging markets excluding China. There are some ETFs that will go into emerging markets excluding China. And there are some ETFs, exchange traded funds, that invest exclusively in different countries like Turkey or China or Russia, Canada, you name it. We have those out there too. So these are the things that I am looking at. Energy stocks. Let's take a look. Royal Dutch down 1%. Hess down. ConocoPhillips, Murphy Oil, Oxy down 59 to 54, and that's one that Warren Buffett just reportedly took a big stake in. Chevron down 8, so 174 to 158, giving it back quick. ExxonMobil 91 back down to 77. Just ExxonMobil and that $80 number. I don't know what it is, but they just don't seem to hold it. All right, and that's about it. That's all I want to go over with you on that particular, on the list of stocks to follow. So that's what's going on. Today is March 15th. Taxes. It's tax day for corporations. So we've got one more month. We've got like a month and a day for tax day coming up. I think it's April 18th this year, right? Because that's April 15th falls on a Saturday. So how are you doing with your taxes? Are you caught up to where you want to be? Have you completed your taxes yet? You expecting a refund? You expecting to owe money? I mean, my goal at the end of the year is to come out as flat as possible. I don't want to be owed money by the government because it's like I gave the money. It's like I gave the government an interest-free loan. I don't want to have to pay any money either, though, because that no one wants to have to dig into their pocket to pay even more money in taxes than they've already paid through their paycheck. So I try to come out even. Do you have a story, a crazy tax story or something? I'd love to hear about it. Make sure you give your CPA or enrolled agent a big hug because they are working their butts off and they've got more rules, regulations, and tax changes to get up to speed with during this crazy time than ever before. So I'm pretty empathetic to the accounting world. Do you have any questions about your portfolio? Do you have any questions about a particular exchange traded fund or a mutual fund that you're holding? I'd love to answer these questions. And if you don't think of it now, you can always reach out to me, send me a DM so we can connect and we'll talk about things. I was asked a question today. I met with a lovely client who's a friend of mine, and she said, with the war and everything else going on, what could you really invest in? And I'm like, you know, this person's older than me, and they will be, um, they've seen so many obstacles in front of the market before. So I'm like, at what point do you get in your life? At what point in your life do you get to the point where, uh, you know, at what point in your life do you get to the point where you're just not really worried anymore about geopolitical events? They've come and gone so many times, and my career is over 30 years long now, and I've seen so many, and we recover. So the point is diversification, which is a strategy that we use to reduce risk, to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. But diversification is very important. When you're investing in exchange traded funds, mutual funds, there is more diversification, because if a stock fails, it could be replaced by the fund manager or by the people who are managing the index. It's kind of weird to say managing the indexes. Indexes are unmanaged, but even like the S&P 500, that is a managed index. There is a committee that picks and chooses the stocks that should be eliminated from the index, and that need to be and the stocks that need to replace the stocks that have been eliminated. So there is a level of management to that portfolio. It's just a pretty inactive strategy, which is fine by me. But you know, if you have an individual stock that went down, I'll show you a. You mind if I show you something real quick? All right, and we're going to end this in a second. I just want to show you what I posted today. I just posted this. Something changed here. Okay, yeah, here we go. Let's see. I just posted this on LinkedIn. But by the way, if you're not connected to me on LinkedIn, you got to get with me there, okay? All right. I wrote this. I posted this before. When a noob investor tells me he's not worried about being down 85% in GameStop because he's in it for the long term, yeah, good luck with that. Yeah, getting a little action on social media. A couple of you. I just posted this like just before I started the show. Okay, so thank you everybody who took an interest in this post. Okay, so the point of the matter is, when you invest with diversification in an index fund or an exchange traded fund or a mutual fund, there is the opportunity for replacement. These particular products are regenerative. So if a stock is pulled out of an index because it either went to zero or was taken over, the S&P 500 doesn't go from 500 to the S&P 499. The committee that steers the index will find a replacement. All right, and that's how that works. So that's where diversification helps. Josh has a comment before about, we were talking about tax season, and he says, still waiting on my refund from 2017. Any advice? Well, you actually have to file your tax return from 2017 to actually get a refund that is due you. But LOL, I know you're kidding. So it's all good. All right, so that's my story. I'm sticking to it. Tomorrow is the big announcement from the Fed that the Fed's going to say we're raising rates by a quarter point. We are looking for more, how should I say, for more direction or for more color from the Fed on how it feels the recent spike up in oil could change the Fed's plans for interest rate hikes, and how the overall war in Europe could change the equation for the Fed's plans to tighten policy and keep raising rates. I'm still in the camp that we'll see 4 to 6 rate hikes this year. I think 8 is a little too many, and I think the Fed would rather take its time and undershoot than overshoot and have to take away the interest rate hikes because the economy slowed down too much. But if we do see the price of oil coming down, which it is coming down pretty hard right now, and it stays down, obviously everything gets cheaper. Inflation starts to mitigate. I wish I could tell you if this drop in oil is a permanent thing, but I think the pop in oil was not a permanent thing. And it just goes to show you that we have enough oil for everyone who needs it. And that's that. Okay. We'll see how it goes. Thank you very much. Josh, man, you never got the check. Well, you need to either speak with your CPA or reach out to the IRS and find out. I mean, if it's a big check, you definitely want to take the time. If it's a little check, then it's probably not even worth your time following up. Just have to look at the time value of your money. That's what happens when we're not efficient. For $100, it might not be worth your time, but if everything was taken care of properly, it just would have happened automatically and it would be no big deal. Okay. I'll speak to you soon. I have to get going. Bye.